Hey there, everyone. It's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage. Welcome to another edition of Java with Jared. Once again, happy Friday, everybody, and hope you guys are doing fantastic. Well, interest rates have just hung in there this week. You know, we had seen over the previous weeks a whole lot of volatility, not as much volatility this week, and rates are relatively unchanged from where they ended last week. We saw a ton of information here from the housing front as well as some other economic data. We're going to see a ton of information next week as well. But this week, the big news really was the Federal Reserve meeting, and as expected, the Federal Reserve did not do anything with short-term interest rates, so that was totally as expected. There was not a press conference for this meeting, and so it was expected that there would really be no changes. There was just a statement issued after it, and people were wondering, would there be any further clues as to when the Federal Reserve would begin their tapering of the overall balance sheet. The only verbiage in there was just that would start relatively soon. So there is going to be a press conference in September and also December. So it's expected that things are going to start happening in September. So we'll see how the market ultimately reacts to that. But as we're leading up to this here, a lot of this data that we're getting is actually pretty good from an interest rate front. For example, we did see the employment cost index. That came out, and that measures just inflation due to wages. And it's expected, because we've been seeing such low unemployment, that eventually could there be some wage pressures. Well, the employment cost index didn't indicate any wage pressures, so that is actually pretty darn good. Now, on the housing front, well, let me go back to non-housing stuff here first. We also did see the second quarter GDP come in, and it's the initial read that showed in GDP was at 2.6%. So it was in line with expectations, but it does not show that there's a lot of inflation pressures. If we take the first quarter, which was in the mid-ones, along with this quarter, we're still, for overall GDP for the first half of this year, only at about 1.9%. So that is actually also really good for interest rates as well. Now, in terms of, again, housing numbers, we did see existing home sales come in showing a decrease of about 1.8%. National Association of Realtors, though, said that was due just to lack of inventory. There's more buyers out there, and if there were more homes, there'd be more homes sold. But as we are seeing here in Denver, there's just not enough inventory, and that's keeping existing home sales a little bit lower. We also did see the Case-Shiller index come in, and from a local basis, Denver once again overtook Dallas, and we are now once again number 3. Last month we slipped on the 20-city index to number 4, but we jumped over Dallas again, and now we are still number 3. Seattle was the top at about 13.3%. Portland was just under 10%, and Denver was at 7.9%. So, again, one of the highest appreciation rates in the country. Things are looking good. So, we're still above the 200-day moving average for mortgage-backed securities, which is a great thing. So we're holding in there, and the 10-year Treasury yield is down below the 200-day moving average, which is also a really good thing. So interest rates are holding in there. The inflation news is not super strong, so that's also good for interest rates. So things are looking pretty darn good. We're getting pretty tight, in a pretty tight range, so things could break one way or the other, either positive or negative, but we'll keep you informed as to what's going on. Next week, we have a ton of information, economic data that's going to be released into the market, and we'll see if that causes any changes, and we will always keep you informed. Hope you have a wonderful weekend. If you're working this weekend, so are we. So if you have any customers that need any help, please give us a call. Thanks for joining me with Java with Jared, and we'll talk to you soon. Bye-bye.